the dollar will be worthless. And how are we going to import oil if OPEC will not take dollars for it? So the dollar will be toast by 2020 and certainly by 2025, and it could be toast much earlier.
Hey friends, thanks so much for tuning in. It's really great to have you all back, and thank you for hitting play. We have back on the line our good friend and precious metals writer Steve St. Angelo from SRS Rocco Report.com. And Steve's site is where fact is separated from mockingbird Wall Street fiction. Steve, how are you?
Good, Sean. It's good to be here. We've had some interesting things happening in the market, especially China, devaluing their yuan. So things continue to get interesting as the day goes by.
Yeah, things are heating up, and I know that everybody has their eye on September, October. In fact, if I may, Steve, I want to play this soundbite from James Wesley Rawls, who I interviewed back in May, and James said this about the fall.
It's time to stock up and team up and train up because time is relatively short. We could very well see the onset of a 1930s scale economic depression as soon as this fall.
As soon as this fall, and he's not alone. As you know, Steve, many pundits are predicting, the Shemitah, the 7-year cycle. We are going to see fireworks in the fall, and Lord knows we've seen a lot of tumultuous events take place just recently. Of course, the devaluation and the continuing devaluation of the yuan. What do you make of it, Steve? Where should we start?
Well, there is a lot to talk about. I think what we should focus on is what I see taking place in the market is the beginning stages of a global run on silver. And now I don't say that lightly because we've had instances in the past, especially in 2008, when there was a lot of retail demand. But it seems to be now that it's changing because there's so much demand now for silver that it's actually making its way into the wholesale market. So, and again, this is still considering that only 1% of the market or less is purchasing silver, and we're seeing such huge demand. So I think going forward, especially if James Rawls is correct, that we're going to have some kind of dislocation this fall, September, October, we will probably see global shortages and the market will not be able to get silver. Investors will not be able to get silver. And I think that's a very high likelihood to happen.
Well, you've been documenting the collapse. As you know, Steve, I like to say in my interviews with all of you intelligent folks we speak with that we are documenting the collapse, and that's in fact exactly what we're doing. It's getting hard to keep up as the dominoes begin to fall really at a more rapid pace. Now, these are your most recent articles just since July 31st. I'm just going to name your last 6 because it's so hard to keep up, but you're doing God's work here trying to inform people on what's really going on in the physical precious metal space. So here's your article from July 31st. Fear spreading in the global financial system pushes gold and silver eagle sales to new highs. And from August 1st, big chunk of JP Morgan's gold holdings withdrawn in one day. And of course, that's when JP Morgan saw a drawdown of 200,752 ounces from their eligible category, nearly 15% of its gold inventory. Your next article here on the 4th, Shanghai silver stocks plummet, more signs of a global run on silver. And then the next one, big production declines from the world's largest silver producers. That's a big story. We've been talking about that with Andy Hoffman for a long time, Steve. As the paper price is manipulated down below the cost of production, the primary silver miners are being decimated. And that will only contribute to the global physical silver shortage, which is now becoming evident. And then a couple more here. Bankers threat, global exchanges continue to bleed silver, and the coming market crash will wipe out global silver supply. Steve, I just wanted to share those with the audience because those who are familiar with your work know that you do not speak in hyperbole. You speak with quantifiable facts. Why don't we circle back to the global exchanges continue to bleed silver? Can you help people understand how we are actually seeing a run on physical silver globally?
Yes. Well, I speak to some people in the industry, and there's certain things I really can't chat about, actually names and figures. But one of the larger dealers is Money Metals Exchange, and they're very honest about what they're selling. And they had a huge increase over the last 45 days, actually now a month, the last 2 months. And they saw a huge 365% increase in new buyers, first time buyers. And so that's happened ever since the supposed Greek exit in the European Union. And I'm finding out that the majority of buying of precious metals by most of the retailers is silver. It's like 80%. And this isn't just mom and pop folks who are plopping down and are buying a 10-ounce bar, or they're getting a tube of silver eagles. These are large, wealthy investors that are purchasing six and seven figures of silver. That's a lot of silver. And so what's happened is, I said this in my article, that we're seeing a huge increase in U.S. silver imports. I think in my last article, we had something like 2,500 metric tons were imported by the U.S. in just the first 5 months of the year. Well, this is up like 525 metric tons compared to last year. Well, if we look at the economic data, Sean, there's less industrial applications or demand for industrial silver. There is the COMEX inventories in the first 6 months of the year were basically flat. And then we didn't see much of a growth even in Silver Eagle sales, not until the end of June and July. So the demand for silver in U.S. really hasn't grown all that much, but the imports have. So what I'm hearing is there have been large buyers of silver, and these aren't the typical 1,000 ounce bars, Sean. These are the 100 ounce bars, because investors don't want to carry around 1,000 ounce bars. Those are used in industry mostly. Those are shipped to fabricators, and they manufacture products with them. But investors are now starting to hoard these 100 ounce bars. And so we actually heard that Royal Canadian Mint has suspended sales of their, I think this was Dave Kranzler on his investment research dynamics, that they've suspended sales of the 10 ounce bar. So now we're seeing a huge increase in demand. It's impacted the COMEX. And just the last, I think it's last 4 or 5 weeks, the inventories have declined like 15 million ounces. But more importantly, it's mostly come out of the registered. I think the registered category was 72 million just about several months ago, and now it's at 55 million. So the majority of the decline, net decline in the COMEX, has come from the registered category. So again, looking at all this information, and then we're seeing India importing record silver. I think India has imported 61% more silver in the first 6 months of this year compared to last year. And they're on track to import 9,000 metric tons. I mean, that's 300 million ounces. And then you add the U.S., which may import 6,000 metric tons. I mean, that's almost 500 million ounces, 60% of global mine supply by these two countries alone. So indications are showing that we're seeing much greater demand for silver. And I will tell you, this is the very last good data point. In July, investors did purchase a lot of gold eagles because they were worried about the financial turmoil coming out of the European Union from the Greek exit. So there was 176,000 gold eagles sold just in July. Well, so far this year, or this month, as of August 11th, they only sold 7,500 gold eagles. But silver eagle sales first 11 days of August were 2.1 million. So the silver gold ratio is 281 to 1 in August compared to 31 to 1 in July. So we're continuing to see wealthy and regular investors purchase silver at a much higher pace than gold.
It's astounding, isn't it? And I'm glad you brought up what's going on in India, because I quote you often. I think it's a very, very important statistic for people to understand that in 2014, India imported 25% of the world's physical silver supply, and this year they're on track to import a third of the global inventory of physical silver. It's stunning. And maybe we should talk about the Shanghai silver stocks. I mean, people need to understand, Steve, that the Shanghai silver stocks peaked in May of 2013, as you write, at 1,143 metric tons, and have since plummeted by 93%. Where is all this silver going? It can't all be going to India. Where is all the silver going from the Shanghai silver inventories?
Well, I imagine it's going to feed either industrial demand and probably now a lot of investment demand. And you're correct. It did peak in 2013. The Shanghai silver stocks were right around 1,140, 50 metric tons. And then they continued to decline until August of last year. And that's when I stopped doing updates because they started to increase, but it wasn't that much. But they increased up until June. And I think at the low in August, Sean, it was 81 metric tons. That's all they had. They went 90% decline. And in August of 2014, they bottomed at 81 metric tons. Well, it built up to 394 in June. And since it's June 15 seems to be the date that things really changed. And that's stemming from Europe and the Greek exit. And now, at last count, I checked this morning, they were at 250 metric tons. So in just a month and a half, it's fallen considerably, as well as the COMEX. So what we saw in 2011, when the price of silver went to $49, the COMEX inventories actually fell, and we have to trust the data that they're putting out, but they fell to below 100 million ounces, the COMEX did. And there was a lot of industrial demand back then and a lot of investment demand. Well, we're seeing the same thing now, but I think the difference is it's more investment demand because I don't see an increase of industrial demand for silver. I think China is slowing down. I think the U.S. is slowing down. The world is slowing down. So they're not producing as many products with silver. So this drawdown that we're seeing in these exchanges across the world I think, is mainly coming from investment demand.
Well, I agree with you. I think investment demand is off the charts. And here's the thing. I sent you two charts from August 8th. I just sent those, so you probably haven't seen them in your inbox yet. It's the gold and silver chart from August 8th. And the reason I want to just talk about this and have you glance at that if you get a chance, Steve, is I want people to understand that what's going to happen now is the Mockingbird mainstream media will, of course, say that because of the global slowdown, which, of course, up to this point, they've been saying everything is fine in the economy and, unemployment's at practically an all-time low, all is well, go back to sleep. Now they're going to start to say that as we approach a recession, if they get honest about the numbers, they're going to say, well, there's no place for silver because it's a commodity. There's no place for silver in a slowing global economy. Now, that's why I want to show people these charts, because nothing could be further from the truth. If you just look at the silver and gold charts from August 8th, it's really stunning because they could not be more identical. So silver and gold, when one plummets, the other plummets. When they respond and bounce back, the other responds and bounces back. And on August 8th, when I snapped these charts, silver was up 30 cents and gold was up $6. And look at the charts. They're practically identical. The point is that these are monetary metals, both gold and silver. And I think if James Wesley Rawls is correct, and if other pundits are correct, in that the fall could potentially see a wipeout, or whenever it happens, I guess it doesn't matter, does it, Steve? The bottom line is when the dollar jig is up, you're going to want monetary metal in your pocket. And I point these charts out because silver is a monetary metal regardless of what the Mockingbird mainstream media tells you.
And I agree. I'm trying to, there's this famous saying that you hear a lot, and it was stated by Meyer Rothschild. And he said this back in the 1700s. Basically, he said, give me control of the nation's money and I care not who makes the laws. Well, you see, that was correct back then because the nation's money was gold and silver. And how did they produce that gold and silver? They did that with human and animal labor. Well, ever since the 1900s, we brought on oil. There's 1,000 slaves in a barrel of oil. So it changed the whole picture. So what happened is we should change the definition. It's who controls the energy supply controls the money, which is the reason why we have the petrodollar with the U.S. So when people say, where's the faith in the U.S. dollar? Is it printing the money? Is it the Fed printing money? Is it control of the media, making sure that everything is fine, that people don't believe the economic situation is bad? No, the faith in the fiat dollar comes in controlling the energy. And that's the reason why we have seen time and time again when countries like Iraq, Saddam Hussein tried to sell his oil in euros, he was taken out. So I believe peak oil, which is happening now, even though there's a glut in the market, peak oil is destroying the fiat US dollar. And it will continue to do that on an ongoing basis. So when people say, well, when will the manipulation of the precious metal end? Well, I think it's happening right now because it's becoming increasingly impossible for the Fed and central banks to prop up the market in a basically it's been a stable conventional oil supply system. We have increase of other liquids, but they don't really count as oil. They're, like natural gas plant liquids has increased considerably in the last 10 years, and they use that as total liquids when they count it. But that only gets about 40% of the price of a barrel of oil. And you can't get certain products out of natural gas plant liquids as you can as oil. So basically, conventional, Sean, has peaked in the last 10 years, hasn't really moved that much. And that's the high quality oil that people want to purchase. So the Fed and central banks have been propping up the market with debt and liquidity to make it look like we're having GDP growth when we're not. And so all this pressure that we're starting to see has become because of this peaking of energy. So when U.S. oil production starts to decline, and it's already doing that, if people want to know, peak shale oil production has already taken place. It happened 3, 4 months ago. It's a done deal. We're never going to be energy independent. Would be nice if we could, but we're not going to be. And I think by 2020, from looking at some of these NG analysts, we're going to see about a 33% decline in U.S. domestic oil production, and it could fall by 2025 to about 60 or 70%. Well, at that point in time, the dollar will be worthless. And how are we going to import oil if people will not take, if OPEC will not take dollars for it? So the dollar will be toast by 2020 and certainly by 2025, and it could be toast much earlier. So the faith in the dollar rests upon energy, and energy, the peak and decline of energy will destroy the US dollar, which will allow gold and silver to rise to the values they need to be. I think the problem is the writing is on the wall, and the U.S. peaked in oil production in 1970. It's not a coincidence that the Nixon dropped the gold peg in 1971. And so we saw a lot of volatility that decade due to peaking of U.S. oil production and then losing the gold dollar peg. And so the volatility has continued to increase, and now we're seeing it's becoming exponential, and it's becoming exponential across the world. So I think as time goes by, Sean, the only assets or some of the best assets to own are physical gold and silver because I believe most paper assets, fiat money, and even physical assets such as real estate will only plummet in value. So to me, it's a no-brainer to make sure you own gold and silver.
Well, the only problem with that thesis, my friend, is that HSBC and Goldman are saying, yeah, not so fast on the gold. We'd really recommend that our clients stay away from gold. Oh, surprise, Steve. They took delivery of a 3.2-ton purchase of physical gold, and on August 6, 2015, HSBC, which also claims to be bearish, took delivery of a 3.9-ton purchase of physical gold. I bring it up because Avery Goodman pointed it out, and we shared it over at SGT Report, that when the banksters say sell, they tend to buy. Goldman Sachs and HSBC have bought 7.1 tons of physical gold. So I think it's a game of do what they do, not what they say, right, Steve?
Yeah, and we have to understand that's their playbook because there's nothing basically backing up the bank's assets, which are derivatives, and then the assets that are there aren't really assets. And you see, this is my saying: peak oil will make assets turn into liabilities. So you have to know which assets to own and which assets to stay away from. 99% of the people are owning assets that are going to turn into liabilities. And this goes above and beyond any agendas that the elite have for the population of the world. Um, because if you look at the graph of oil production, it's exponential. Well, nothing goes up exponential and then remains there. It remains flat for 100 years. It comes down exponentially. Well, the exponential increase of oil production has mirrored the exponential increase of the population. And I'm not saying the population needs to go away. I'm just saying oil allowed us to grow a lot of food and to have a lot of population that we didn't have before. So I think we will start to see a decline in oil production. It will also force a decline in GDP, and we will see this continue to fall, and it'll put more pressure on the fiat banking system. You see, the bankers can't continue to prop this up in a declining oil production scenario. It just won't work anymore. So I see this becoming a serious stress, especially in the next few years, and most certainly by 2020, especially for the United States. I mean, we were producing a lot of oil, 100 to 1 back in 1930, and now we're going after 5 to 1. And you know, there's a trillion barrels of that. Uh, it's called shale booming in Utah. There's supposedly a trillion barrels. Well, the EROI is only 2 to 1 or less. You can't even, the companies aren't making money in the back end. How are they going to make money in oil shale at 2 to 1? And Chevron had its worst quarter in 13 years. You see, the shale companies are in bad shape. They're in big trouble. They have huge debts, but it's now extended into the majors. The majors now are losing money. I mean, this is never heard of before. So I just wanted to say that. But I do agree that the peak dollar is coming from peak oil. And the dollar should have collapsed years ago. But because we have our military and we are able to control the world's energy supply, we have aircraft carrier groups around the world to make sure that the shipping lanes remain open, oil continues to flow, trade is not halted. So, and then because still most of the world purchases oil in dollars, the U.S. has a monopoly on the dollar. And so peak oil and the peak dollar run hand in hand. And I also say, as oil production starts to decline, especially in the United States, it will mean the end of the U.S. dollar. So you're correct. Other countries are seeing higher values for gold and silver because they have their currency has depreciated against the dollar. Well, with this recent devaluation of the Chinese yuan, I think it's opened up a Pandora's box. And we're going to see a race to the bottom, and I think it's going to happen much quicker. So watch for the U.S. shale oil production to decline significantly in the next 6 months, and that is going to add pressure to the U.S. dollar. So I think peak gold, dollar, and peak oil run hand in hand. And as oil production declines, this is the neat part. This is the inverted relationship. As oil production declines, the value of gold and silver will increase. It sounds crazy, but that's how it's going to happen.
Right, and I want to throw into the mix here peak silver. I've talked about peak silver with Andy Hoffman. Probably no better person to talk about peak silver with than you, because as we have documented here, the worldwide supplies are collapsing, investor demand is off the charts, and the primary silver miners are being decimated. So are we also at peak silver? Should the name of this video be peak dollar, peak oil, peak silver?
Actually, in supply, yes. There's over 100 trillion of conventional paper assets under management, but there's a very limited supply of real gold and silver. And so I found this amazing, Sean. Australian silver production fell 31% in the first quarter of 2015. And I tried emailing the Australian government website that handles that data, and I haven't received a response. But I actually looked at their spreadsheet, and in the first quarter of 2014, Australia produced 491 metric tons of silver. Well, this first quarter of 2015, it fell 151 metric tons to 340. Well, Mexico, their production is down about 6% year to date, and Peru is up about 3%. So when we average the top, these are three of the top four producers. China is number two or number three in the world. But if we average these top three producers, silver production is down about 6-7%, and that's a pretty big move. But I do think we're going to see peak silver, Sean, from base metal mining. And that will occur because 70% of silver comes from copper, lead, zinc, and gold mining. But I do think, and this is where I differ a little bit with Andy Hoffman, I do see the primary silver miners becoming some of the best investments to own in the future because of this interesting information. Once silver becomes hard to acquire, and there's shortages of it, and in institutions and a lot of wealthy investors are starting to wake up. They will not be able to get the silver. So what's the next best thing? You're not going to buy a copper mine that sells a little bit of silver. You're going to move your funds into these primary silver miners, which aren't many of them. So I do see a huge increase in the values of the primary silver miners. Now they could be taken over by the government, but I don't think that will happen initially. So I see things a little differently. I think the primary silver miners will surprise us, and production in the primary silver mining industry could grow, but overall, global silver production will decline because we're going to see a peak from the base metal mining industry first.
I tend to agree with you, Steve. But I guess I just want to leave folks with this, Steve, if we could. Let's just talk about where we sit today. We're having this conversation here as the third week of August begins. We're staring September and October in the face. As we're sitting here having this conversation, because someday in the future, somebody's going to find this conversation on YouTube, might be a year from now, 2 years from now, and they're going to listen to this thing and they're going to say, wow, I can't believe that silver was $14 or $15 when those guys were having that. But that's where it is today. Can you impress upon people what a value that is in a world of absolute criminality, in a global economic Ponzi? Can you express to people how you see physical silver at $15 an ounce? And the reason I'm bringing this up is you emailed me yourself and said you haven't bought physical silver in a long time, but I think you just recently did. Did you not?
Yes, I did, and I actually think a good deal out there now is the smaller denomination silver, the 1/4 and the half ounce rounds. I think that's a great way to go because you can get more coins, and it's better than the 90% junk silver because from what Doc says at Silver Doctors, you can't even get it now. But it's hard to figure out the value in a quarter of 90% old quarter silver. You know, it's hard to trade with that, but if you have a 1/4 ounce or a half ounce, you know exactly what you have. So I think when silver revalues, owning the smaller denominations might be a wise thing, and we're seeing more and more people purchase these smaller denomination silver coins. But I do think silver is still at 15. Now, most of us in the precious metal community would never have thought we would see this price. So we did underestimate what the Fed and central banks could do. But because there's so much paper out there, there's so many assets that base their value on a growing energy supply. They're sitting on a cliff, and we're starting to see that cliff erode as the Chinese stock market is collapsing, basically. And from what I understand, certain analysts are saying the U.S. stock market is only a month or so away from that. So we're going to see a huge contraction of most paper and physical assets. And right now, investors have the ability to purchase gold and silver, and especially silver, because you can get silver now at $15 an ounce. Uh, in a few years, we'll look back at this and you won't be able to get it. And I want to say this too. Some investors aren't buying silver because they think we're going to see 1980 to 2000 all over again. and that the price of silver is just going to remain low for 2 decades. And the reason why silver remained low for 2 decades is because the price of oil remained low for 2 decades because the world continued to bring on more oil production. So we're not there anymore. Those days are over. You can't. We're not going to see that again. So I think investors who haven't purchased any silver, I think they should not be waiting for a lower price. Whether we could see a lower price or whether they're trying to time the collapse of the market. And I hear from some of the people I listen to, there's a lot of big buyers out there waiting to buy, and they haven't purchased silver yet, but they're trying to time the market. I think that's the worst economic or investment advice anybody could do. You could always buy more later, but I think people should have a good holding of silver and gold right now.
Yeah, timing the market in silver, my goodness, if you've been timing the market in silver and you still have dry powder and you weren't buying at 40 and you weren't buying at 30 and you weren't buying at 20, then I think you've timed the market pretty well to jump in at 15. As for me, I've always been very, very fond of the government issued low mintage coins, the ones that Brother John and I have sort of coined as semi-numismatic over time, and those are the lunar rounds from the Perth Mint. I've always been partial to the kookaburras, and what you find is when you buy these low mintage coins, like the kookaburras used to have, I think, 100,000. And then in some years they increased it to 300,000 mintage. Once those coins are sold, they're gone. And what you paid $3 or $4 over spot for then is now trading on eBay. For instance, now I think some of those kookaburras are in the $35 to $45 to $55 an ounce range because they're gone. They're semi-numismatic. And of course, anything from the Royal Canadian Mint I like. It's just, for me personally, Steve, I found that the government issued coins have a tangible beauty to them, a quantifiable beauty to them that you don't find from just the common silver rounds or even the silver bars. When I first got started, I liked silver bars. Then I got into a poured silver bars kick. I really love the look of those. But I think for lasting value and recognizable value, especially to sheeple in the future who don't really understand precious metals, government-issued coins like the ones you mentioned, junk silver, and really junk silver ought to be called vintage silver because it too is beautiful. But government issued coins make a lot of sense.
No, I can't disagree with you there at all. And I do like the American Eagles, Silver Eagles, the Maples. I think owning any silver is a good thing in the future. Of course, there is some problems maybe with counterfeiting, but I think that is such a small percentage. But if you do purchase from reputable dealers and you are purchasing the official coins, it's highly likely, 99.9% chance that they're not going to be counterfeit. 100% chance they won't be counterfeit. Now, if you're purchasing official coins through other people, other eBay, you don't know because I've seen some counterfeits, but it's still very small. Again, I do think owning silver now is probably one of the best investments going forward because, again, the U.S. retirement market, Sean, is right at 25 trillion, and the only reason it's staying there is because the Fed and Treasury are propping up the stock market. Without this, and that's the reason why we've seen this huge disconnect. The metals and commodities have continued to fall for the last 3-4 years, but the stock market is defying gravity, and even though it's fallen a little bit lately, it's gone parabolically up almost. Well, if that comes down, it destroys the faith that the investors have in their 401k and their retirement plans. And so when you start to see people finally get out of that, they're going to go into other assets like silver and gold. And again, we're seeing huge buying with just 1% of the population. And that's the thing people need to really understand when they're holding back on their purchases of silver and gold.
Yeah, you're absolutely right. And you couldn't name a more contrarian play than physical silver. I mean, you'd really be hard pressed to find a smaller market, papered over world of intangible nonsense, really. Ones and zeros and brokerage statements and endless paper Ponzi schemes that have lowered the prices of silver and gold to these below the cost of production levels. And, just to flesh out your point about counterfeiting is a huge problem coming out of China, and people do need to be very careful, and you need to buy from dealers you trust, dealers with reputations that are lasting. Of course, the Doc and our friends over there at SD Bullion do a great job. And Steve St. Angelo does a terrific job at his website, srsroccoreport.com. Steve, I think we've covered a lot of territory here. Anything else you want to hit on before we lose you?
Yeah, you did bring up a good point. The criminality in one of my past articles, which we didn't discuss about, I don't think, is the the settlements and fines by the top 10 banks in the world, and most of them were U.S. banks, of course, was 128 billion since 2009. 128 billion they paid in fines and settlements for rigging this or screwing that up or something. Well, I calculated that that money could have purchased all global silver production since 2009. I mean, so that just goes to show you how screwed up the system is. If the banks are paying fines that could purchase all of silver production in the past 6 years, things are pretty screwed up. And lastly, I don't know if I mentioned this before, but I have a silver chart report that has 48 charts in it, and it's been out a month now, and there's some information in there that I don't think you can find anywhere on the internet. So if folks want to check that out, you can go to the SRS Rocco report. I put out 2 to 3 articles a week, and I look forward to anybody coming and checking out the site.
Our listeners are very supportive of the great people out there in the truth movement. So is that a report you're selling, Steve?
Yeah, it's right now. It's $25. It's 58 pages. There's 48 charts, and there's one chart in there that I know 99% of the precious metal investors has never seen before. And if you take one look at that chart, Sean, and you'll know why silver has reacted and the price has moved a certain way over the past 100 years. And so when you see that, then you understand more about my energy analysis and how things are going to work out in the future.
Okay. Well, very good, Steve. Thanks so much. And guys, thanks for listening, and thanks for supporting us at sgtreport.com. If you want to support our sponsors, click on the SD Bullion link. Check out their silver and gold supply to shore up your own personal supply. And thanks for visiting us at the Phaser and the libertymill.com. Real news 24/7. Thanks, Steve.
Thanks, Sean. It's been great.
Thanks, guys. Have a great week.